After 4 straight weeks of the stock market falling, we just saw the best day for the stock market in years, all after President Trump posted this on Truth Social. Quote, "I am pleased to report that the United States of America and the country of Iran have over the last 2 days had very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East." As soon as President Trump posted that, we saw the stock market in the United States and other stock markets around the world rally at record speeds. But not just that, we also saw oil prices fall because now investors are saying the concerns about a recession are over, the concerns about inflation are over, the concerns about a prolonged war in the Middle East are over, but there's still more work to be done. So if you're an investor, you want to pay attention to what's happening. That way you can make financially smart decisions instead of emotional decisions. So let me break this all down. About a month ago, the United States attacked Iran. After that, oil prices shot up, worries about a recession shot up, worries about inflation shot up. Now, the initial announcement was that this attack and war in Iran was only going to last a couple of weeks. Here we are approximately a month out, and now we have this discussion, according to President Trump, that the war might be ending soon. Now, of course, things can change day by day, but if that happens, if the conflict in the Middle East ends, that would then resolve some of the concerns about oil prices, it would resolve some of the concerns about inflation, and it would resolve some of the concerns about a recession. Because the big concern that everybody had is that we would see a repeat of the 1970s in 2026. In the 1970s, we were already facing an inflation problem, and then we saw an oil crisis because the United States also got involved in a conflict in the Middle East. So we had high prices, and then oil prices shot up, which made the inflation problem worse. And then in response, the Federal Reserve Bank had to aggressively raise interest rates in the 1970s into the 1980s, which not only caused a recession, but it really slowed down the economy for many years because the Federal Reserve Bank had to aggressively raise interest rates to around 20%, which means if you were going to get a mortgage in the 70s or 80s, you weren't paying 6% on your mortgage or 7% on your mortgage or 10% on your mortgage or 12% on your mortgage. You were paying 15, 18, maybe even 20% a year on your 30-year mortgage. So the concern that a lot of investors had was, if we continue to see this oil crisis, the Federal Reserve Bank is not going to be thinking about cutting interest rates, which was the original discussion in 2026. The Federal Reserve Bank is going to have to think about raising interest rates. That raising of interest rates not only would put the United States into a very tough economy, maybe even a deep recession, but it's going to hurt jobs and it's going to hurt the stock market. That was a big reason why we saw a big sell-off in stocks. It also hurt gold prices because the idea, according to investors, was if the Federal Reserve Bank is raising interest rates, that's going to strengthen the dollar. Yeah, it could cause a recession, but it could strengthen the dollar, which means the gold is not going to be as valuable as it was before. Now things are starting to flip again. Yes, it is an extremely volatile market, which is why you do not want to be a trader. I'll talk more about this in just a minute, but you do not want to be trading on headlines because it is so unpredictable. So let's talk about now what investors in Wall Street are thinking that the Federal Reserve Bank is going to do and what that is going to mean for investments. By the way, we've been covering all of this in Market Briefs. Market Briefs is my free newsletter for investors where every day my team is working to break down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and we have hundreds of thousands of investors that read Market Briefs every single day. So if you have not subscribed to Market Briefs yet, I have that link for you down in the description below. So when it comes to now thinking about what is the Federal Reserve Bank going to do now based off of this new information, there's 2 things you have to understand. Number 1, we have no idea what the heck is going to actually happen. This is just rumors. Hopefully the war is going to end. We will see when it actually happens. The second thing is we are seeing a very disjointed stock market. In fact, it is the second widest performance gap between different stock market sectors that we have seen since 2002. What does that mean? In 2026, energy stocks are up 33%. Software stocks are down 20%. Financial stocks are down 11%. Semiconductor stocks are up around 13%. So we're having very different sides of the stock market. We have very clear winners, very clear losers, and a big driver of that is artificial intelligence. Well, what does that mean? Because there's already been concerns about a recession, there's already been concerns about inflation. And before the war in the Middle East started, the Federal Reserve Bank had essentially said that we are going to cut interest rates in 2026, just not as aggressively as we originally thought. This cutting of interest rates was there to help stimulate the economy and to help stimulate the job market, because we've been seeing jobs get hurt, especially because of AI, because of advancements in technology. And so the Federal Reserve Bank was saying, in order to help the job market, in order to help the slowing economy, let's put more money into the economy through lower interest rates. That way businesses can borrow more money, they're going to want to do more growth, which means they'll probably want to hire more people. Well, once the conflict in the Middle East started, the Federal Reserve Bank said, oh no, we can't cut interest rates, because if we did that, that's going to make the inflation problem a lot worse. We're already going to see an inflation problem because of oil. We're already going to see an inflation problem because as oil trickles down into other parts of the economy, the prices of everything go up. So we can't cut interest rates. We might have to raise interest rates. The raising of interest rates would slow down the economy during a time where the economy is already slowing down. And this is where many investors get concerned. They say, okay, if there's a war in the Middle East, I'm going to wait to buy because I don't know how much more down it's going to go. We know that if there's a war in the Middle East, it can be very prolonged. It can last years. It can cause a lot of pain in the economy. It can cause a stock market crisis. It can cause a recession. And so I'm going to wait to buy. But we don't know what's going to happen. And what we've seen throughout history is that the people that try to time the market end up missing some of the best buying opportunities. We can just take a look at some of the recent events that happened in history. In 2020, I was making videos on YouTube. The pandemic hits, the economy is shut down. What happened? The stock market collapsed. It was the fastest stock market sell-off we have seen in history, even faster than the Great Depression. And I'm telling you this example because I saw it firsthand and I saw people's reactions firsthand. And I was making videos here saying, I don't know how much further it's going to go down. I don't know how fast it's going to go down. All I know is as the markets are going down, I'm going to keep buying. I call it ABB, always be buying. And so it was what I call drip buying, buying in phases. Every time the markets went down, I would buy more. And when we would see big down events, it would be another buying opportunity. Well, during that time, when I was talking about how markets going down was a great buying opportunity, everyone was saying, Jaspreet, the markets are going to collapse. It's going to get a lot worse. And there's no point to buy now. Buy once things are really decimated. And I said, yes, if that happens, I will keep buying. Nobody knows. Now, I've been studying the financial markets for a while. I own a financial technology and research company. We've studied a lot of financial history, and nobody predicted the amount and the extent to which the Federal Reserve Bank was going to stimulate the stock market, but they did. And so we went from the fastest stock market sell-off in history to the fastest stock market boom in history, both in the same year. And the people that were waiting for that perfect opportunity missed one of the best investment opportunities in this decade. Fast forward to 2022. Stocks were falling. I'm making videos about, hey, always be buying. Markets go down. We know markets go down. They will go up. Nobody knows when. But you want to use downturns as an opportunity to purchase. Well, during that time, many investors were saying, this is the beginning of the end. We're now going to pay the price for all the money printing. We're now going to pay the price for this induced economic boom, this induced inflation. Markets fell by 20% in 2022, and then it started to rally again in 2023. 2025, what happened? We saw 3 stock market crashes in a matter of months, because when President Trump announced tariffs, the stock market crashed. Then he paused tariffs and announced it again. Stocks crashed even harder. Then he paused tariffs again and then announced brand new global tariffs, and then the stock market crashed even harder. Each time, the same thing. I talked about ABB. Always be buying. The only change you make when you're following something like ABB is that when markets go down, you buy more. But besides that, you don't change your strategy. You just keep doing it for years because it has been proven to win. Well, what we saw is that by the end of 2025, markets were breaking a brand new record high. The investors that were buying when markets were going down were able to grow their wealth significantly because we saw 3 market crashes in 1 year. People wait for a market crash to buy stocks, and many times you have to wait years for that to happen. We saw it happen 3 times in 1 year. Here we are in 2026. We don't know what's going to happen. I have no idea what's going to happen in the stock market this week, next week, the week after that, next month. The people that are predicting, they are lying. They have no idea. There's no way to predict. But what we do know is that the investors that are investing for the long term are the ones that are going to build wealth. We can take a look at history to predict that. Now, you don't have to just buy something like the S&P 500. That's not what I'm saying you need to do. What I'm saying is you have to understand that people get emotional. President Trump put out a tweet or a Truth Social post about the war is going to end and markets rally. We haven't seen any signed documents proving that yet. We haven't seen any proper stopping of the war yet. Sure, maybe we're not attacking, but this is where you have to remember, emotions move markets. And your job as an investor is not to move your money based off of emotions. It's to move your money based off of financials. Emotions are the enemy of profits. And it's extremely difficult when markets are moving down. All you see is people talking about how markets are crashing. You need to sell because the world is going to end and it's different this time because we have inflation, we have oil crisis, we have all these bad things that are going to happen. Instead, what you need to understand is how these changes create opportunity, because every time something happens, it creates opportunity. And it's becoming a cycle. Something bad happens, it creates buying opportunity. And a lot of people say, this time is the end, it's different, Jaspreet, don't buy, this is a horrible time to be thinking about buying. Now, don't get me wrong, recessions happen, market crashes happen. They've happened before, they're going to continue to happen. We have seen 16 recessions over the last 100 years, 25 market crashes defined by a 20% price drop over the last 100 years. They are a part of our economy. They're going to continue to happen. The people that panic sell when markets go down are the ones that lose money. The people that are waiting for the perfect time to buy are the ones that don't make any money. But the ones that are able to actually buy when people are running away with a system are the ones that build their wealth significantly faster. Why? Because now you can come in and buy great investments at a discounted price. But that requires you to not listen to all the noise, not get caught up in all the emotion. Stay calm when people are freaking out and when you see markets go down. It's not easy, but it's a proven system. Now, when we go through the next recession, when we go through a real market crash, when markets fall by 30, 40, 50%, and markets stay down for 2 or 3 years, people will freak out. They will say, Jaspreet, this ABB thing doesn't work. You have no idea what you're talking about. And then fast forward 5, 7, 10 years, and you will see that the people that stuck with their strategy were able to build wealth as long as they were buying good investments. But you have to know what your strategy is. If you're just buying broad indexes, ABB has been proven to work. Now I get it, I'm just a random guy on YouTube. I can't tell you what to invest in. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Or you can be more of an active investor if you're looking for slightly better returns, because if you can find where the money is moving, where the opportunities are moving, you can find even better gains if you're willing to put in that work. But it requires you to stay disciplined. Again, we'll be doing our best to keep you posted on market briefs. If you have not subscribed to that yet, I have the link for you down in the description. And if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor. That way we can continue to spread this type of financial education. Thank you. President Trump just confirmed that he wants to get rid of your income tax. Take a listen.
I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love.